Let me ask you something. If tomorrow market opens and it crashes 30%, what are you going to do?
Sell everything?
Or we can buy more.
Or you are going to do as it is? Just hold and do nothing. Today we are not doing a theory. We are discussing practically that if crash occurs someday in market, maybe market is down by 30% probably, then what is the strategy or what is the thing that investor has to follow? And I guess we will be surely discussing real steps, real allocations, and real psychology in this podcast. So Darshan and Ridhima, welcome to the Wealth Show, and let's talk about the panic in market. Okay, guys. First of all, let's discuss why do investors lose money in market? So ideally, crashes happens throughout the time. But Darshan, can you tell me data-wise what actually happens as in terms of crash historically?
Historically, major crashes recover, but most retail investors exit near the bottom. That's the pattern. They react very emotionally instead of strategically.
Exactly. Market don't. I feel market don't destroy their wealth, but the panic that is happening in the psychological mind is the major reason for the exit.
But Aditya, it is very difficult to stay calm when you see your money falling every day. So, what an average investor should do at that time?
See, I personally, if you ask me, I give a three-step approach and I call it as my framework. सबसे पहले तो don't check your portfolio every hour. गिर रहा है, क्या हुआ, कितना ऊपर गया, कितना नीचे गया. Don't do that. It creates more panic. ठीक है. Second, don't trust on any of the WhatsApp forwards or any kinds of advisors or fin influencers who are randomly giving and saying anything. अभी तो गोल्ड एंड सिल्वर का इतना फियास्को चल रहा है. आई हैव आल्सो हर्ड कि गोल्ड 50,000 आने वाले. Bullshit. It is not possible. Okay, so don't trust on any of the unauthorized forwards or any kind of influencer who is telling just to sell the content, right? And third thing, just ask yourself a question: Is it is just a stock price that has changed because of panic, or business has fallen down? So if there is some change in terms of fundamental of the business, then it should be a panic for you, and you should exit out from that investment. But if it isn't, it is just a price fall, then it is going to recover someday. So ideally, these three steps I recommend in terms whenever you feel like having panic in market, will your wealth journey. Okay, guys. So let me give you other than those three steps. I'll again tell you कि ideally whenever you are creating your wealth journey, you should follow a five-step approach. Okay. Let's get very practical, and it is possible also. Let's consider tomorrow market falls by 30%. So first step that you are going to focus on is recalculating your asset allocation. Let's say in your existing portfolio, if your equity allocation was near to 60%, and after falling down because of crash, it has decreased down to 45%. Okay. So this is not a strategic change. This has occurred because of market falling. So rather than panicking, I feel it's a rebalancing opportunity.
So instead of selling, we might actually need to buy to bring it back to 60%.
Yes, obviously, because let's say if it has fallen down to 45%, then you should technically allocate such rebalances that it comes back to 60% of the overall portfolio. Okay. Step two that I follow particularly is deploy your cash gradually. Let's say if you have 1 CR, 2 CR, 5 CR, doesn't matter. Do not go and put everything in market. Just make small baskets of it and start deploying one by one, whenever you feel it's a right or it's a buy on dip opportunity or kind of something.
But how much at one time?
See, ideally, I would recommend you should divide it into 3 to 5 different tranches, and depending on the market and the opportunities, you should start investing one by one, because catching the bottom it is impossible, and no one does it consistently. So this would have been step two, and also let's discuss the another step. See, ideally, whenever there is a bottom or panic or downfall in market, stocks with low quality, like low bad fundamentals and unstable stocks, tends to perform weaker, every like most weaker in the market. Okay. So ultimately, that is the time when all of your balance sheet are exposed, all of your negative things are exposed, and everything that is not good in market gets highlighted with everything, right? So I would recommend that first of all you shouldn't have any low quality stock in your portfolio. Your portfolio should be fundamentally very strong portfolio, right? And particularly avoid any stock that could have maybe opportunity to fall around 60-65% just because of its speculative nature.
So focus on strong cash flow companies.
Always you should focus on the companies which have stronger cash flows and very good fundamentals.
Okay. So, Aditya, what do you means? Can you please advise us? Should we stop the SIP or continue it?
See, ideally, SIP is something that shouldn't be stopped. If you ask me what is the tenure that I should be doing SIP for, then I would give the answer as forever. Okay. So there is one simple understanding. Whenever market is down or market is crashed or you are getting a cheaper rate, you try to get more units because the value and amount of your SIP remains fixed throughout the period. So whenever markets are down, you actually try to gather more number of units. And when there is a good time in market, you actually try end up creating a bigger value than what you could have ideally done in bullish market.
Mhm.
And obviously, I would just give you one brownie point, maybe a fifth point you can consider. That is focus always on learning. Try to focus on balance sheet. Try to focus on profit and loss that company is doing rather than just scrolling and listening to here and there with this someone coming up on TV and saying something nonsense. Don't focus on that. Company every quarterly gives out their balance sheet. Company attends the press conferences. They give their arguments on there. Just go, listen to it, consider it, and then make up your mind. Don't just randomly listen to anyone.
So Aditya, what is the psychology of crashes?
See, Darshan, uh, what ideally I think is na ki investors, specifically retail investors, try to act very emotionally in the market. Okay, and that is somewhere could be a biggest mistake, I guess.
So they compare portfolio peak to current value and feel loss even if they are in long term.
Ideally correct, and what I call it as an anchoring bias.
But I think social media is making everything more worse.
See, that's true, and that's why the thing is that very serious and wealthy investors try to avoid these noises during a serious crash or some panic times in market.
So, Aditya, I think now it's enough. Now, can you tell me what we would do, what you would do personally if this situation occurs?
Okay, so you're coming directly to the point. Fine. So let me discuss the 5 points that I would do. As I've mentioned, 5 point framework. Let me give you a very practical approach that what I would do. Okay. First things first, I would review my allocation as I've mentioned. Whenever I feel that I am getting away or I'm driving away from my allocation, I'll try to rebalance and bring it back to what is ideally been because I as of my risk appetite. Okay, whatever capital I get by through maybe that is freed up because of debt exposure in or in case I have some extra cash to deploy in market, I'll try to deploy that in particular staggered manner, maybe in 3 to 5 tranches. Okay, with regards to it, whatever equity exposure I'm having, I'll try to push it more and more towards large cap because they provide stability to the portfolio. Okay, not only with regards to large cap but also I will try to maintain a global exposure because whenever one thing is going wrong with India, it doesn't matter. Like it is not mandatory that thing is particularly going wrong with China as well, right? Or maybe with Hang Seng market as well, or maybe with Europe market as well. So having healthy allocations toward other market, other growing or developing nations market gives me opportunity again to bring back my provide some kind of downfall strategies for my market to my portfolio. Okay. And see, one important thing is I'll stay patient. I'm in market since last more than 8 years. That's what I have been seeing. I've seen COVID ka crash. I have before that I have seen a 2020 wala bull run also. So there are multiple things. See, ideally, no matter market is panic and going down, no matter market is very bullish and hitting all-time high or 52-week or Nifty is making new high, you have to stay calm. Again, there is a quote saying that Warren Buffett had said, ki, like be fearful when everyone is greedy and be greedy when everyone is fearful. So that's what is the thing is when panic occurs, you have to be greedy. You have to start accumulating better stocks at very good price that you can get. And so whenever there is market hitting 52 week high and everyone is very optimistic, that time you have to be little bit cautious about the market because you don't know what is coming ahead.
Yeah, and I would
So
like to
what
increase allocation to index funds during the panic.
makes sense if you don't have much knowledge about market कि अभी क्या चलेगा क्या नहीं चलेगा, you are not able to figure out about sectors and track markets and everything, it makes sense at the better value you invest in index fund.
Exactly.
Yeah, also
And
I
what's
will
the
also
one
avoid.
point that you would like to give to our investors, Ridhima?
So I think we should avoid checking our portfolio daily.
Yeah, it's absolutely makes sense. Cool. So I guess we have discussed enough of the points, and in the concluding statement, I would like to say ideally I feel कि crashes are not the wealth destroyers, right? But your psychology does. And in fact, cash is an opportunity to transfer your wealth from impatient to patient. If you remain patient in market, you will surely earn. But if you remain impatient in market, you will lose everything. So if you think about long term market, or you are thinking about your long term wealth, you must learn to survive the volatility in markets, the hiccups in the markets, and yes, ideally staying up with the market and having good distributor or advisor by your side, it is surely a helpful thing, and you can really earn good amount of markets, good amount of money from the markets. Cool. Thank you so much, Darshan. Thank you so much, Ridhima. It was absolutely nice talking to you. I hope we will see you again in some other episodes on the Wealth Show, discussing some other topics for to add some value to our investor. And yeah, thank you so much. And yes,
Thank
guys,
you.
please don't forget to subscribe, comment, and do share it with your friends if you find it at least even 1% helpful to you. Thank you. Bye bye. Have a good day.